technical analysis with the triple bottom chart pattern, which in this case defines the reversal of a deep retracement that's quite large, even though it's not the main bullish reversal pattern for the larger uptrend that began during the formation of the double bottom back here. On the next chart is an example of the triple bottom with a declining lower portion, but nonetheless the upswing points still have enough overlap of open, high, low, and close prices to define these levels of support. And it's even more straightforward with the top portion, which is already horizontally aligned. This 1025 to 1033 range has already been significant in the past, with it offering support and more recently opposing the final phase of the drop for a brief period during the formation of that 3 methods falling candle pattern. Indeed, it's a quick conclusion to the pattern. There's a fast series of consecutive closes above 1033 to accelerate the uptrend much higher in a relatively short period of time. After a moderate retracement is halted, we get this. One of those situations where there's a pattern that's technically a reverse head and shoulders pattern, with the first and last points being horizontally aligned while the middle upswing point is slightly lower, to form a slight difference from the normal triple bottom pattern we've seen so far. It's a minor variation and not that important, but something to point out. More importantly is the upper boundary, which is a clear horizontal level for a triple bottom or a reverse head and shoulders that has a quick series of closes above it to accelerate the uptrend that has sharply reversed and will naturally encounter stronger support potential when falling back onto this same range. Over here, 2 upswing points with relatively medium to small candles that are quite horizontally level with each other. The same could also be said about this one, because as usual when outlining a pattern, attention is often concentrated around the real bodies of candles rather than the wicks. And indeed, the lowest closing prices at these swing points are quite level. Here's a demonstration of an upswing point that isn't part of the main triple bottom outline. It's an acceptable variation which doesn't happen as often, especially if the triple upswing points are part of a more rectangular horizontal range, which isn't the case here considering how these downswing points are oriented. As a result, the upper boundary, and by extension the entire formation of this triple bottom, become significantly wider. But nonetheless, the clear swing points from this bullish reversal range still turn out to be highly influential on the chart for a long time, not much different from a more standard triple bottom reversal. In other words, that classic and distinct outline of the capital letter W. Here the ranges of the lowest candles for each swing point are quite level as well. The closing price for the middle one is slightly higher, but that's okay because its lower wick is essentially overlapping almost all the range from the first and third upswing points. Such a minor deviation is okay. It doesn't have to be a situation where closing prices and the ranges of the candles are perfectly horizontally aligned, like with the case of the 2 downswing points defining the upper boundary. In fact, it's even good to see the second upswing point is a bull hammer type candle to demonstrate bullish sentiment in the shorter term as well. Then as usual, this triple bottom range will be an excellent reference for future support, the quality of which can be seen by how candles form open, high, low, and close prices very close to these levels. In particular, how candles tend to rebound and close at or above these levels. Since this range holds firmly, despite the fact double and triple bottom ranges fail to decisively clear over the 1955 level, the support range remains quite strong, never dropping below the 1880s, so it's not too surprising when a more defined uptrend eventually develops.